the lingering cost of free money. Has there ever been a time in history where the government handed out this much money this fast? Not really. Trillions were pumped into the system practically overnight. Stimulus checks, PPP loans, EIDLs, enhanced unemployment. It was the biggest financial experiment in modern history, and we're still feeling it. Because here's what no one's really talking about. The money's gone, but the effects, they're baked in. Prices didn't come down, they just stopped rising as fast. Groceries, insurance, utilities, all still inflated. And now the Fed's stuck. They can't slash rates like they used to because the monster they printed into existence, it's still eating. We gave out more money than ever before. Now we're paying it back invisibly through inflation and expensive borrowing. People who locked in 2 to 3% mortgage rates during the stimulus years, they're not moving. Why would they trade for a 7% rate and a higher payment? So the market's frozen. Prices are too high to buy, too low to sell. Stimulus created a generation of golden handcuffs. They got the deal of a lifetime, but now they're stuck in place. It didn't just change prices, it changed people. Young adults grew up watching checks hit bank accounts just because now they expect safety nets, bailouts, airdrops, fast money, and that mindset stuck. We saw the rise of meme stocks, gambling apps, side hustles with no customers. It's the lottery mentality repackaged as freedom. Free money changed behavior. Some people never left the dopamine era. We didn't fix spending habits, we fed them, and now the debt numbers are staggering. Credit card balances have never been higher. Buy now, pay later is being used for groceries and gas. People are literally paying interest on pizza. Stimulus didn't create freedom, it created inflation, and a spending addiction we can't shake. People who knew how to invest took their stimulus checks and bought stocks, crypto, real estate. They 10x'd. Everyone else, they spent it. Now they're paying more for everything, and they're locked out of the assets that ran away from them. The stimulus didn't close the wealth gap, it cracked it wide open. Some people became dependent, others became skeptical. One side is waiting for the next check. The other side is building bunkers. But the truth is this, the system gave out free money, and what it bought was distraction, dependency, and delay. It felt like help, but it postponed the real reckoning. We didn't fix the engine, we just flooded it with gas. Here's something I've learned after living through multiple economic cycles. Markets move, but the playbook doesn't change much. If you study history, even recent history, you can see where we're headed. Number one, dot-com bubble, 1995 to 2001. Hype, easy credit, and policy fuel. In the late 90s, tech optimism exploded. New internet startups with no earnings raised billions in IPOs. Behind the scenes, the Fed had been cutting interest rates since 1995, following the 1994 bond market crash, creating loose credit. Investors flush with easy money poured capital into speculative tech. From 1995 to 2000, the NASDAQ rose over 500%, but in 2000, when the Fed raised rates to cool inflation, the bubble burst. 5 to 7 trillion in market value was lost over 2 years. Many retirees and everyday investors were hit hardest. It wasn't just optimism, it was liquidity-fueled mania. When cheap money floods in, it chases risk. Number two, 2008 financial crisis, the rise of quantitative easing. The housing collapse triggered the first modern QE experiment. The Fed purchased $1.25 trillion in mortgage-backed securities. This was sold as rescue stimulus, and it worked. short term. But the real result, a massive asset boom in equities, housing, and bonds. From 2009 to 2020, the S&P 500 gained 400%, while wage growth and savings lagged. People think QE is neutral. It's not. It favors those who already own assets and punishes those who don't. Number 3, 2020, pandemic stimulus on steroids. COVID hit and governments hit overdrive. The US injected over $5 trillion in direct stimulus, expanded QE. Everyone got checks, businesses got bailouts, markets got a backstop. The result? Crypto exploded, stocks soared, real estate broke records. It felt like free money until inflation showed up. This was the first time in modern history that consumers got a direct shot of the printing press, and they spent it fast. Number 4, 2022 to 2025, the bill comes due. The Fed reversed course. Quantitative tightening replaced quantitative easing. Rates were hiked at the fastest pace in 40 years. Inflation cooled, but now we're left with sluggish growth, stubborn prices, sky-high consumer debt, weakening job market, still inflated asset prices. This is what the tail end of a stimulus cycle looks like. It always ends with pain, especially for the unprepared. 1995 to 2000, low rates and tech hype, dot-com crash, 2022, 2028, housing credit boom, great financial crisis, 2009 to 2020, QE-fueled asset surge, everything bubble. 2020 to 2021, stimulus and loose money, COVID bubble, current inflation. 2022 to 2025, QT and rising rates, slowly economic stagflation risk. Tech stocks, crypto, housing, they all ran hot off cheap money. But bubbles don't pop because of greed. They pop because the money stops. Right now in 2025, we're in that same position. The money has stopped, but the cost of everything hasn't. Whether it's the dot-com bubble, the housing crash, or COVID stimulus, it's all variations of the same script. Stimulus comes in, asset goes up, inflation sneaks in, the tightening begins. Pain hits the middle class. If you can study the past, you can see the future. And if you want to survive what's coming next, you better start reading the script. If you're still here, thinking differently, moving with intention, you're already ahead of the game. Because this next wave, it's not just about stimulus, it's about strategy. The $5 trillion sugar rush is gone for now. The helicopter checks, the easy mode, the free ride, paused, not dead. History tells us when things break badly enough, they always print again. But that printing doesn't save everyone. It punishes the unprepared and rewards the people holding scarce assets, real skills, and leveraged positions. So don't sit around waiting to be rescued. Build now, own now, learn now. No one's coming to save you, but you can save yourself. And that's what this channel is here to help you do. So if you're ready to think long-term, move with purpose, and build real freedom, like, subscribe, join me here at Grey's Horizons, because we're not just watching the system anymore. We're building our way out of it together. I'll see you in the next one.